Hello everyone, and welcome to the Profitability Market Overview. Today is January 10th, 2016. We're going to start off with a little review of the larger time frames for an overview for the beginning of the year. And you'll see here is the S&P. We have a wave 1, an A, a B, and a C of wave 2. Looks like a simple correction, and then we have a long trend up. We also have divergence here on the peak and the AO, so wave 3, currently in wave 4. Now if we go to the weekly chart, we can see that breakdown a little better. Here's A, B, and it looks like we are now starting that C wave down of the correction. On the daily chart, let's add the bars. On the daily chart, we can see this has been very difficult. I have never seen a correction or a market with this kind of behavior in the past. So all we can do is trade what we see on the chart and what the chart tells us. Obviously, we had the A wave down. This is a very, very difficult B wave here. Typically doesn't retrace like that. And then we've had the C wave, I believe, that started actually on January 4th coming down. If this is the C, C will go below A, and A was at 1813. So if that's true, we can expect to see lower lows here. If you're trading smaller time frames, such as a 30-minute chart, you can see there have been some nice moves with a nice bullish divergent bar here. Peaks on the AO, but also back and forth into the mouth. Again, this is a correction, so in corrections we will have some difficult behavior. Next market we're going to take a look at is going to be the euro. This is the monthly chart on the euro, just to give you an idea of where we are on the bigger picture and what we can expect. So on this chart obviously just started back here in 98. We have a 1, 2, 3. We have an A. Now this could be an irregular B here, or this could be part of A and just this is B. But either way, we're now clearly in the C wave. This looks like 3 of C based on our peak on the AO, 4 of C, and possibly coming out of going into 5 of C, or it has one more push up. That is not clear yet. When we go to the weekly chart, we can see here's that 3 of C. Here is a little A, a B. Now that could be C, or this could be A, B, and then going back up for C. The corrections in this euro during the B wave have been extensively long and difficult. The best way to understand or the best way to know what kind of behavior is in that correction is look at the past behavior, self-similar repeating patterns. So when we see these difficult corrections, that may continue. Long term, I do think we're going to see lows taking out the previous low here at 1.047 to complete the C wave down. After that, it's quite possible this market will then turn around. If we go to the daily chart, here on the daily, we can see that this was that long 3, and here's that 4 that we're talking about. The weekly didn't show the pattern as well. And the market's going to take just a moment. So here is that long A, B, C. Then we had another push down, 1, 2, 3. I believe this is 4 of 5. And we still have one more push down to finish that 5 of 5. There is divergence in this wave, so A, B, and it looks like we are still in the B wave, the most dangerous place to trade. Remember that. Be careful in the B, like a bee sting. Next market we're going to take a look at is the Canadian dollar. Now here on the Canadian dollar, you can see that we had a nice tall peak here on wave 3. We had a wave A or a 1, a wave B or 2, and a C or a 3. Now, since the data just starts here in 2001, this could end up being a wave 1 and all this being a wave 2. This is all the information we have for now, so we make the best assessment. For now, we count this as a 3, A, B, C of 4. But what makes me start to think that in time we're going to find this being a wave 2 is that 2 typically retraces faster in time and in price. And 2 sometimes will go back to almost the beginning of where that move started. So this is looking more like a 2. If that's true, in the future, that's great for the Canadian. We'll be looking at much higher highs again. But for now, Canadian dollar still has some more to go. Not good for their currency, obviously, but that is what the chart's telling us. The weekly chart wide open. We do have some divergence. And here on the daily chart, again, you can see that we have divergence developing, but the alligator is wide open. AO is red and increasing, so everything here tells us that Canadian is not quite finished going down. Now the Australian on a monthly chart, we're going to take a look at it as soon as I get some bars. There we go. very little bit similar. We have a wave 1, looks like a 2. Here's our tallest peak for 3, an A, a strange B, and this looks like a C. 3 of C. We don't have divergence yet here, so it's possible there's more. When we go to the weekly, we will start to see the divergence, though, when we have the correct number of bars. So on the weekly chart, you see there is divergence. From where it started here to here, we do have enough bars, but this market may have an extended fifth wave. That happens. Just because we have 5 waves doesn't mean the markets are ending. It's been clear if you look at the S&P that market has had 5 waves many times and just continues to create multiple divergences. So here it looks like this bottom is being taken out on the weekly, which indicates we're in another wave. Same here on the daily. So this is a good place to be short if you're trading the Canadian, as long as the risk parameters fit your trading style. If the risk parameters don't fit, then you'll have to wait or find a different market. But overall, look out here on the Australian dollar is there's more room for it to go down as well. If you're looking at a 4-hour chart or a smaller time frame, you can see that alligator again is wide open. You had a couple fractals. Was there a BDB on top? There was not a BDB that was valid, but you did have a fractal entry here if you're going shorter time frame. Taking a look at gold, which is one that we're all been watching and interesting. Of course, I've been predicting for quite a while that we know where gold is going long term, but that the C wave down has not been finished. And still correct. We have a 3 here, we have an A, strange B, and this looks like C. This is the C wave, and we do have divergence here if we're looking at the AO throughout this wave. But again, gold had a 20-year correction previously, so this correction could last quite a bit of time as well. If we go to the weekly chart, we want to discount some of that A, B, and here's the C. So as the C is coming down, notice it's in and out of the mouth, in and out of the mouth. We have a push back in, a push back in. So this is its behavior. This is what you want to pay attention to. It's the personality of gold at this time. Right now we see it's going back into the mouth. If we take it to our daily chart, we're going to see on the daily chart, it takes just a moment to get there, but on the daily chart, as this market is going up, this is a direct opposite of what happens in the S&P. So typically when the S&P is going down, we tend to see that the metals are going up. Money doesn't disappear. Remember, money is just moving from place to place. So if money is coming out of the indices, then it needs to go someplace else. A lot of that money is bank, institutions, things like that, not just private investors. So it's going somewhere, and a lot of the time it goes into the metals because they are a solid, thought of as a solid place to be. Gold has had that move up, so we had our bottom here. We've had a little A, B, and this looks like a C up. Now, it's quite possible that's the bottom, but my intuition tells me we're not quite at the bottom yet here. If we go to the daily chart, we're going to see on the daily chart, or sorry, that is the daily chart. So this is the C wave, and we may possibly see another push down after this is over, once the S&P hits its bottom as well. Now, silver is going to be very similar to gold. Monthly chart, we had that large peak of a 3. We have an A, B, C wave. Now, if you notice that silver has retraced a lot further than gold has in this particular move. If we are going to do our retracements on this, we would start, let's say, at the bottom here, put it at the top, and we can see that we've gone well past the 0.618 area. So it is quite possible that silver may hit a bottom before gold. Not sure, but it is possible. Gator starting to turn, divergence on the AO. Weekly chart will show you a little better picture of that. Multiple divergences here on the AO, alligator coming together. And then here on the daily chart, we have the alligator price action in the mouth. Now, silver had a very nice move, and now it's back in the mouth. This is a difficult area to trade. Remember, look at the previous corrections and how did they behave. This is very difficult, very wide range. If you're looking at the range of price here, it's a $9,000 range. So that may be a little bit too expensive. You may want to look at a different market. You might want to, the minis don't have great volume. But I do think long term, once we hit this bottom, if we go back to that monthly chart, that if this was 3, 5 is going to be above that. So silver is going to be well above 50. And if we go back to gold on the monthly, gold is going to be well above 1,800. I think that we could see gold. Let's push this chart together. I think that we could see gold easily anywhere above 2,000 and up after this correction is over. Next chart's going to be crude. Take a quick look at crude on the monthly. Again, we had a huge wave 3. We have an A, we have a B, C. C should go lower than A. It is now approaching that. Our low on A was 32.70, and we have 32.10. Sorry, we did that this week. Many people thought that wasn't possible, but the count is the count. Crude can go as low as it goes. They say, what's the best way to get crude higher prices? Well, take crude lower. So crude is on the way down. It's been a beautiful ride. If you go to the daily chart, you can see we had a great, huge wave 3, a wave 4, a wave 5 correction, and then another extension of that wave 5. So this last push down, we've approached the previous area. I don't know how much lower crude can go. If it hits the 25 area, I would think that we may be getting close to a bottom. So if you're looking for long-term or you're trading stocks, you may want to look at the ETFs or look at the alternate stocks that reflect the commodity area. Now here is soybeans on a weekly. Soybeans difficult. Any of the grains have a truncated Elliott wave count, so they're hard to follow from a long time back. What I look at is just what's currently happening, which is what's affecting me. The gator is closing. We had a peak here. We have divergence here. So it looks like we could be looking for a turnaround possibly at the end of this wave. So here on the daily chart, we're absolutely in a correction. Looks like a B of some sort. If it breaks this area of 911, I would be interested in looking for a solid long position. If it goes back below the bottom again, if the risk fits, I might take it, but I think I'm more biased to the long-term side at this moment. Now, sugar is an interesting chart. We had a long 5-wave degree that C wave possibly that finished here back in August, and since that point, this market has been taking off. So this is either a very strong A or it's a wave 1. We're not sure. But either direction, we had a beautiful BDB here on the daily chart to get in. Let's just take a look at what that risk was. The risk on that particular trade was $300. Very easy risk. So far, let's just say we rode that up until somewhere in this area. That's over $3,000 profit. So if this is the one, we're now obviously in the correction. This looks like a B wave. So I would be patient if it breaks this high in that area. Again, if the account size, experience, and everything works, I'd be interested in looking at a long position. If you want to trade the C down, there may be an opportunity there. I would do that on a smaller time frame to avoid the risk and to be sure to get out when that market turns. C waves tend to turn very quickly on the bottoms. Now we have got the Euro US dollar. This is the Forex chart. And on this particular chart, you can see that we have a 5 of 3 here. We have a 3 and a 5 of 3. Here's your divergence between the waves. We have an A, a B, a C. And then this is a little bit difficult, new wave down, 1, 2, 3. So I think this is 3 of 5, an A and a B, possibly another C wave up, and one more move down. Now if we take this to the monthly chart, just to get an idea of what we're looking at the bigger picture, the euro versus the dollar, let me remove some of this text, get it out of your way. And so here, if that's true, 3 of 5, 4 of 5, we could still see one more push down here, longer term, to complete this wave. So it could even go down to parity around that dollar. There's quite a possibility. Only time will tell. We have to follow the market and see what it tells us, not our opinions. Here on the Aussie-Canadian, we figure some type of 5-wave finished here, a 1, a 2, a 3, based on our AO peak. This is our 3, and we're in a wave A, a strong impulsive wave down. If you take this chart to the daily, or this is the daily, I'm sorry. So this is your wave A. We could expect a B and then a C coming down a little bit lower to finish this move out, and then a 5-wave move up. Now if we go back to the S&P, just to say again, this has been a very explosive move. This was A, strange B, looking like this C is coming down and will take out that low. In between, it could be a fall, like a rocket fall, or it could be some small retracement in between. Nobody knows what's going to happen. All we know is that we want to follow the market and be in tune. Don't take risks that don't work. If you're taking a fractal breakout, you may want to use the fractal at the other side. It depends, again, on risk, experience, and your account size. So this is the end of the market overview for the Profitability Trading Group. Everything in this is made for educational purposes only. I hope everyone has a great trading month. Happy New Year, and we'll see you next month.